Hello, welcome back. We are going to take a look at a subscriber suggested company that I actually hold myself. And this is Wynn Resorts. It's the very well known resorts and casinos. And they are huge and they are amazing. I have been there in Las Vegas. I'm a big fan of Vegas personally, and I do like the resorts there. And if you haven't been, you should probably go at some point. It's much cheaper than you would expect. I'd say the hotels are cheap. What is more expensive is the surrounding stuff for the most part. But the hotels are relatively cheap, especially when you compare them to other resorts like European. They're rather cheap for what they are, of course, because they're five-star hotels. So it's pretty nice to go there. But regardless of that, we're gonna take a look at Win, which, as I mentioned, I do hold. But I want to let you know, and actually, I want you to understand why I'm holding this, because I'm holding it not as an investment, but as a trade, as a swing trade, as we're calling it. A trade is a trade that you buy today in order to hold for a few months or maybe a year or so, and then sell it at a higher price. Why am I doing this with Win? Because Win is a very cyclical company. As you'll see it here, it's actually part of the sector name. It's called consumer cyclical because it changes, it's affected by market conditions. And as you'll see here in the max chart, this is why you're looking at a lot of peaks and a lot of bottoms here. So going high, going low, high, low, high, low, high, low. That's the story of the company, and that's what you would expect. And this is why it potentially pays to buy the company at a very low level. And this is why I bought it back in the previous slump it had in 2020. Remember when we had the crash with which everybody was selling, I was buying. And this is when I bought X, for instance. I bought Facebook. I bought a lot of stocks back then. It was a good opportunity. And for instance, I made this kind of trade with X. I bought about $3,000 of X, American US Steel. I bought it at $8 and I sold at 25, which means, and I held it for a year, like I sold this year. And so this was X. And so I made like 4 times my money with this one. Now 3,000, when I bet this money, it was a very small percentage of my portfolio, and that's critical. Because when you are betting in these companies, it's a trade, and trades can go wrong and you will lose all your money if the company defaults. It's possible. I think it's unlikely, but possible. And so you're actually risking some money in order to make much more. So it's the very typical thing about trades. You are risking one to make three. And so if you lose that one, then and you have won one trade of these, then you need to lose 3 more trades just to get even. And so if you're willing to do that, you have to realize that you need to be betting with money that you don't really need, and it's a very small percentage of your portfolio. The same story is not similar with a company like Facebook or Alibaba, because these companies are fundamentally sound. These are way different, and I'm buying Facebook and Alibaba for the long run, for many years, to hold them for many years. With Win Resorts, I wouldn't hold for more than like a year and a half or so. I'm basically waiting for the reversal of the cycle, and I could have actually even sold, because it was like I bought around 50 something, and then it reached about 140 or so. I was actually thinking about it back then, but it didn't last for long, unfortunately. And where you want to sell this company would be around these levels here, for the most part, 165, because you need to look at the previous peaks. Like the previous peaks were 153, 165, 196 here, and over here 143, 144, 137. You will see that they are around the 130 to 150 level. So it's probably best to sell at these levels, because there are a lot of people who have been holding the bag from these similar levels, like here and here, for example, and you will be finding potentially some price resistance when you are looking to sell at higher levels. And so this is the easiest way to trade when you are trading and when you are not really holding for the long term, because you're playing the technical chart, and you're actually playing the cyclical pattern here. So that's as I mentioned, a completely different story than actually holding the stock for a long while. I have to stress that, because we are not talking about so much about the fundamentals of the company here, probably not at all, but rather expecting the company to exit the pandemic and go back to its former financials, which were sound but not amazing. But we are basically again playing the cyclical type nature of this company. This is the thing. And you have to realize that this is very, very different than fundamental investing. I have to really, really stress that fact. Because as you'll see here, the company's PE ratio and price to free cash flow ratio have been really hurt over here. That's because of, again, they have been losing money during the pandemic. They are not making that much profit. It used to be positive here. And they had to print shares in order to fund themselves in 2021, as you'll see here as well. Now, all these key metrics here, net income growth, free cash flow growth, they have been going negative. As you will understand, they have been losing revenue, losing net income and all that. That makes a ton of sense. And they have quite some debt when you compare it to their equity, which is negative, because it's only equity that can be negative here for the number to be negative. So we do want to take a little bit of a closer look just to see what the company is doing financially and understand the story, because you will see here that the revenue of the company has been around the $6.6 billion mark for the most part, but it's in the pandemic years it has fallen off a cliff, as you would expect, almost 50% down or more. And in the previous years they actually were making profits, as you'll see here, and it started really falling in 2019 and 20, and it's a little bit better now in 2021 at least, so it's increasing again. Now, the scary part sort of about the company is the balance sheet, which shows negative equity. It used to be positive, and at some point they had almost 2 billion. They had to burn that cash during the pandemic years and burn those equity, this equity really. And so right now they are about 800 million in negative equity, which is I think it's sustainable for a little while. I think the company will not have much trouble sustaining themselves for a little while, but they would have to add some more additional paid-in capital, so they would have to keep diluting shareholders if that happens, if they cannot go back to profitability. But based on that fact alone, I think that they wouldn't have a lot of trouble keeping themselves afloat for the next 5 to 4 years, to tell you the truth. If they had to to get some extra issued shares, they would, I'm pretty sure, do that and fund themselves for a few more years. It would be bad for an investor, of course, but again, for a holder that is holding for a swing trade, it's a completely different story, because again, we're playing the cyclical nature and not the company itself. Now, the cash flow statement, you will see here that the company has been having negative operating activities cash flow, and the previous years, the good years of the company, the normal years, were actually much into the positive numbers in terms of operating activities. And so the net income for the net cash used for investing activities is also negative. What's interesting to notice here is that the cash from financing activities in 2020, that is actually positive, as you would expect, because the company got a lot of debt, as you will again kind of expect. But now it's actually turning back to paying some debt back and not increasing debt. So I'm assuming they are expecting that the company is going back to profitable years. Potentially, this is what it looks like. We'll see, I guess. But they did slash the dividends as well. I remember correctly. It's actually almost zero right now. As you'll see here, they were paying some dividends. It's actually better that this is another good thing actually, because when they slash dividends and there is a going back to normalcy, then, because there's no extra cash flow extracted from the company, it typically tends to become sort of more like a growth play. And so you can actually see the price increasing more and faster. And so again, that's another reason why it can be a potentially interesting trade here. Again, a swing trade, not a long-term investment. And the free cash flow here is in the negative, although a little bit better in the past year. It used to be good in 2018 and 17 pretty much. 19 and 20, actually 17, 18 was also not great, but 19 and 20 were terrible because of the pandemic. Now, if we take a look at the stock evaluation tool, it's again, this is a tool that I wouldn't probably even use in this company, because I wouldn't be interested for a long-term hold. But I'm going to do it for the exercise here, so that you see what kind of value it makes sense to pay today at least. And so with a revenue growth of a little bit of a conservative one, let's go like 6, 8, and 10 here. I do expect it to be much more, because I think it will eventually reach these previous levels of 6.3, 6.7 billion. I'm pretty sure they will eventually. So there may be some years of strong revenue growth coming soon for the company, maybe. The net income margins here are small, low, like let's go 5, 7, and 9 here. And the free cash flow margins, you will see those being positive here, but they are not really positive, because the free cash flow margin is basically a division between the free cash flow and the net income. And if both are negative, then this value is correct. It is 44%, but it's actually a negative figure in terms of our investing, really. And so we need to bear that in mind because they're both negative, as you'll see here. And so, practically speaking, this is a negative value for us. What we want to be using here, you'll see that the company had its best over here in 2017. I'm not gonna go with this, of course. I'm gonna go much more conservative, but I think 80, maybe 85 and 90 would make some sense. And then 13% for our annual return here. And so let's see if we have these values and hit calculate, what are we getting? And we are a little bit aggressive, of course, because we're expecting the company to go back to profitability soon after the pandemic. And so still, you're looking at a company that is a little bit higher than what you'd like it to be. But again, it's not that I'm buying the company for a long-term investment. It's just interesting to get these values so that you know what's the about value of the company based on the financials and some projections in the future that could actually happen. So this is actually pointing to a little bit less risk if you had than if you had a company that had these values at like 10 or 5 or something of that sort. Because again, you are playing this, if you are buying this one, mostly for a swing trade and not for a long-term investment, or at least you should. You shouldn't really be relying on this company for long-term as a long-term investment. Again, because of the very, very cyclical nature. It pays much more to buy it and sell it when the cycle starts to dissipate, when you're at the peak. Hopefully that video helped you a little bit. I think this is an interesting one and I still hold it. Yes, I could have sold. I think I missed it actually at some point because it happened so fast. But I could definitely have sold around these levels over here. Yep, definitely. This is where about where I wanted to sell it actually. I missed it, and then it started going down, and I wasn't really paying attention. But okay, it can happen. No big deal. But you can kind of see what's the deal here with these kinds of companies, and I think I'm willing to wait to reach these levels again, at which I'm probably gonna be selling. This time I will hopefully catch it before it starts falling again. Alright, so I hope you enjoyed the video. Please leave a like if you did and it helped you a little bit, and remember to subscribe because very, very soon I will be giving you access to this tool and you want to be around for when that happens, because this is a very powerful tool, I can tell you that. And I'll see you in the next video. In the meantime, take a look at the one that I made earlier, and it discusses day trading, a thing that I have done quite some of, and it's a very, very interesting thing. So I'm actually breaking it down a little bit for people who are not aware of how that works. Thanks for watching and see you in the next one. Bye bye.